We've talked at length about just the structural nature of the slowdown that perhaps China is going through, right, as a bigger picture, not just, post-COVID or pre-COVID, and the limitations that policymakers have, even from the very top, to be able to turn that around.
I think, as you say, there are structural limitations, but there are also policies the government can put in place to deal with some of these structural problems. Like, I think one of the big ones that people often don't think about, as you say, people talk about post-COVID or pre-COVID, or look at the immediate problems that the economy is facing. But, the birth rate and the demographic changes that China is undergoing those are impossible to turn around. There's nothing any government has been able to do in the world to really turn around a slowing birth rate and a falling population like China is facing now. On the other hand, if you look at Japan, you can see a situation where the population has been falling for more than 10 years now. The workforce has been falling for even longer, and yet the number of people in work has actually increased. So if the government does actually put in structural policies to encourage more women to return to the workplace, encourage people to work longer, these kinds of things, that you can actually see a situation when you have a falling population and a rising workforce. But what we're seeing in China is that the government isn't able to do those things here. You're not seeing a big change in how many women are in the workforce. The government has been unable to raise the pension age, and so force people to stay in the workplace longer. So the government is facing a lot of these structural problems, like a secular slowdown in the economy, falling productivity, falling workforce, falling population, and yet it seems to be impossible for them to actually make the changes necessary to deal with those problems.
And we're seeing those struggles across a range of sectors in the Chinese economy, right? So what are some of the most pressing changes that need to take place?
Well, the biggest problem that the economy is facing is the housing market, and the biggest problem with the housing market is that it needs to collapse further. The demand for housing is not there, and the falling population means that demand for housing is not going to return to the levels that are available now. China still has massive overcapacity in house building. There are way more builders than there is actually demand for houses now, and that's not going to change in the future. The demand for houses isn't going to increase radically from the situation now. It may rise a little bit as people become more confident with that housing prices have stopped falling. It may rise a little bit more because there's still urbanization happening and people still want to upgrade the current housing stock, because a lot of the housing stock in China is very old. But you're not going to see a return to the levels of growth which was supporting the thousands of various developers across the country. So there still needs to be a shakeout in the housing market. And the problem is that shakeout is going to be damaging for the economy. It's damaging for demand. It's damaging for demand for iron ore, for commodities from other countries. It's also very damaging for the corporate sector. So the problem is demand is falling and needs to fall further because of the demographics, but at the same time they need to support the housing market now because the economy is in such a poor condition. So this contradiction is what they're facing, and so far they haven't been able to decide which is the better. Do they look long term and basically accept the housing market slowdown will continue and possibly get worse, or do they look short term and try and prop up the housing market and housing prices now to provide growth and jobs this year and next year?
There are a lot of contradictions, right? Another one would be where we're left with when it comes to the deleveraging campaign. There seems to be renewed commitment when it comes to looking at local government debt, which we know has continued to balloon during COVID-0.
Right, and this is another. I think the local government debt issue is one of those things that is an incredibly pressing problem, and there is a clear solution to it, which the central government doesn't want to do. The clear solution is the central government needs to step up and take more of that debt onto its own balance sheet. The central government's balance sheet is very, very good. The debt to GDP ratio of the central government is much, much better than many other developed nations, specifically Japan. If you look at Japan, where Japan is, China is in the situation that Japan was in say the 90s, where the central government has very little debt. There is more debt out in there in the community, in the corporate sector, and in local governments. And what has happened in Japan over the last 20 years or 30 years, say, is that a lot of that debt has been moved to the central government's balance sheet, and so allowed local governments and companies to repair their balance sheets. And so China has this solution, but what you're seeing this year and what you saw in previous years is that the central government doesn't want to take on that debt, and they want to force it to be resolved out in the provinces. And so you're just seeing this debt problem, this local government financing vehicle problem, is ballooning in the provinces, and some of them are struggling to deal with it now. Guizhou is struggling to deal with it. Yunnan is calling out for help. In Mongolia, places in Mongolia are also asking for help from the central government. So there is a problem and there is a solution. The problem is that that the central government doesn't want to take doesn't want to take that solution, and so they're forcing it to continue on and to grow further.